it's a mess of a report. I mean, since they revised
it's a mess.
It's very hard to get a read from 1 month's data, and it's a little perplexing to me because commodity prices have been weakening recently, which doesn't show up in here at all, but may show up a few months down the line. I think the real critical issue is profit margins, because businesses have not been able to pass their higher cost on to consumers. And you see that in some of the recent announcements where you see that chains are consolidating operations in some ways to get a handle on labor costs and to get more efficient operations. So they're trying to squeeze a little bit more efficiency out of their operations because they can't pass through their higher cost.
So do you just discount the month of October for PPI? Because right now the equity markets, granted the response is fairly muted, but we did go lower on the back of these numbers on the thinking that the Fed's path is even more set in stone at this point. Would you say to discount these numbers?
No, I wouldn't say to discount them. I think that you can't say that this one this one's all right and the other ones weren't. I mean, you have to look at them collectively, and there's kind of a herky-jerky motion in this number where you seem to capture all of the increase in 1 month, and you really should spread it out. And it does look to me that some of the more leading indicators of inflation are beginning to ease, and I think that's because the global economy is slowing, and oil is probably the best example of that. So I don't know that the horse is out of the barn. I think that it certainly bolsters the case for a rate hike in December that looked like a sure thing anyway. And we've got rate hikes in March, June, and September, and have been contemplating putting one in December. But I really wonder if the economy is going to stay this strong throughout that entire period, or if we don't get some sort of interruption. The housing data was something that was notably absent from the Fed statement. They did acknowledge the slowdown in business investment, but housing's been falling for 6 months in a row, and residential investment has declined in 5 of the last 6 quarters. So it was weakening before interest rates went up.
Mark,